Hi everyone. Welcome back to Positioned.app. In our previous video, we covered the basics of the Relative Strength Index, or RSI, what it is, how it's calculated, and why the 30/70th thresholds matter for identifying potential oversold and overbought conditions. Today, we're taking our RSI knowledge from theory to practice by analyzing Tesla's stock performance. We'll combine RSI with the 50-day simple moving average to show you how these tools work together to provide stronger trading signals. Let's analyze this chart of Tesla's stock, TSLA, in action using the RSI and the 50-day simple moving average, SMA. We'll examine the price action from March 3rd to March 21st, 2025, focusing specifically on how these two indicators work together to generate trading signals. Before diving into the chart, let's discuss why combining RSI and SMA creates a more robust analytical framework. First, trend confirmation. The SMA defines the overall trend direction, bullish above and bearish below, while RSI confirms the momentum behind that trend. Second, signal amplification. When both indicators align, the signal strength increases significantly. Third, divergence detection. Discrepancies between price action relative to the SMA and RSI readings can provide early warning of potential reversals, which we will explore more about RSI divergence in our next video for advanced RSI applications. And finally, overbought and oversold context. RSI extremes have different implications, depending on whether price is above or below the SMA. Now let's analyze the chart. Tesla begins our analysis period, trading near $300, then breaks below the 50-day SMA. Notice how the RSI simultaneously drops below 50. This interaction, price breaking below SMA while RSI crosses under 50, provides a strong bearish confirmation signal. When these two indicators align like this, the probability of continued downside increases significantly. Between March 5th and 7th, Tesla continues trading below its 50-day SMA, while the RSI remains below 50. This sustained interaction confirms persistent bearish momentum. Note that even during small price bounces, the RSI failed to recover above 50, and price couldn't reach the SMA. This interaction signaled the downtrend remained intact. On March 10th, here we see a critical interaction. Tesla's price plummeted to around $220, significantly below the declining SMA, while the RSI dropped to extreme oversold territory below 20. When price is this far below the SMA with RSI showing extreme oversold conditions, it often indicates capitulation, the final phase of selling before a reversal. On March 11th, this is our first instance of divergence between indicators. Despite price remaining depressed well below the SMA, the RSI begins turning upward from oversold levels. This interaction, RSI improving while price remains below SMA, often precedes a relief rally. On March 12th, Tesla rallies toward the 50-day SMA, around $245, as the RSI climbs towards 60. This interaction signals strengthening momentum, but notice what happens next. Looking carefully at March 13th, we see Tesla's price approaches but doesn't successfully break above the 50-day SMA. Simultaneously, the RSI approaches but doesn't cross above the 50 threshold. This dual resistance interaction, price failing at the SMA while RSI stalls below 50, often signals that the recovery attempt lacks sufficient strength to reverse the primary trend. On March 14th, Tesla's price initially continues its recovery attempt toward the 50-day SMA, with RSI maintaining readings above 50, showing continued bullish momentum. This synchronized movement suggests the recovery was gaining traction rather than failing. Tesla begins March 17th, trading above the 50-day SMA, but quickly faces selling pressure, dropping below the SMA as traders take profits from the recovery rally. The RSI falls sharply toward the 30 level. This decisive move below the SMA, with corresponding RSI weakness, confirms that bears have regained control of the short-term trend. On March 18th, the RSI starts below 30 in oversold territory, and although it attempts to recover somewhat, it remains below the critical 50 threshold throughout the trading day. Simultaneously, Tesla's price continues to consolidate below the 50-day SMA. This interaction, persistently weak RSI readings below 50 while price remains below the SMA, confirms that the bearish trend remains intact despite the initial stabilization in price. This is a textbook example of how even after an initial decline, a failure of both price and RSI to recover above their respective thresholds, SMA for price and 50 for RSI, signals continued bearish pressure. During March 19 to 20, this is the textbook bullish confirmation interaction. Tesla's price breaks above its 50-day SMA, with the RSI simultaneously strengthening and crossing back above 50. This synchronized interaction, price above SMA with RSI above 50, provides a high-quality signal that the downtrend may be reversing. After breaking above the SMA, Tesla pulls back to test the 50-day SMA from above. The SMA, which previously acted as resistance, now functions as support. Meanwhile, the RSI maintains readings above 50, confirming sustained bullish momentum through the pullback. By March 21st, we see the culmination of the bullish interaction. Tesla trades well above its 50-day SMA at $249.11, with the RSI reaching 69.70, approaching, but not yet at overbought levels. This interaction suggests strong bullish momentum with potential for continued upside. Trading tip: understanding RSI and SMA interactions can significantly improve how you interpret market structure and timing. When it comes to entries, the alignment between momentum and trend is key. Short entries are typically considered when price breaks below the SMA and RSI crosses under 50, signaling weakening momentum. For long entries, there are two approaches. A more conservative approach waits for confirmation from both sides, price moving above the SMA and RSI holding above 50. A more aggressive approach enters earlier, when RSI crosses above 50, even if price has not yet fully reclaimed the SMA. For exits, the focus shifts to identifying exhaustion. For short positions, exits become relevant as RSI approaches oversold extremes, while price remains extended below the SMA, suggesting downside momentum may be fading. For long positions, consider taking profits as RSI reaches overbought levels while price is stretched above the SMA, indicating potential exhaustion. Equally important is recognizing failed breakouts. When price moves toward or slightly above the SMA, while RSI remains above 50, watch for rejection. If price quickly falls back below the SMA after a brief breakout, it often signals a failed recovery rather than a sustained reversal. From a risk management perspective, structure should guide your decisions. For long trades, protective stops are commonly placed below the 50-day SMA once a breakout is confirmed. For short trades, reducing exposure becomes prudent when RSI enters extreme oversold territory, as downside momentum may slow. Finally, position sizing should reflect conviction. Full position sizing is most effective when both indicators align, price relative to SMA and RSI above or below 50 in the same direction. When signals are mixed or non-synchronized, reducing position size helps manage uncertainty. Overall, the key is not reading RSI or SMA in isolation, but interpreting how they confirm or contradict each other. This interaction provides a more structured view of momentum, trend strength, and potential trade opportunities. As you develop your trading strategies or conduct market research, RSI can serve as an important component of your analytical toolkit. But like any tool, its effectiveness depends on the skill of the person using it. I encourage you to review your recent trades and analyze whether you've been interpreting RSI appropriately and identifying these patterns on your own charts. With consistent practice and patient observation, your skills will improve with each chart you analyze. Share your insights in the comments. In our next video, we'll explore advanced RSI techniques that can significantly enhance your trading strategy, divergence, failure swings, and support and resistance trend lines. If you found this helpful, like and subscribe for more trading education content. Also sign up for Positioned.app for real-time swing trading signals. Let's make smart trading decisions together. Thank you for watching. Until next time, happy trading!